If you have a financial advisor and you understand Bitcoin, it might be time to move on and fire that financial advisor. Of course, this isn't financial advice, but we are going to take a look at some terrible takes from financial advisors on what Bitcoin is. And if somebody doesn't understand Bitcoin, they likely don't understand money or economics. And it's crazy to trust those people with your wealth. So here we have Charles Najar. I apologize if I pronounced that last name incorrectly. And he is posting on LinkedIn where good ideas go to die. Here we have him saying Bitcoin will be remembered as the ultimate example of human madness. How governments allowed this to happen is simply unbelievable. The thing is that's interesting about Bitcoin is that it's permissionless and censorship resistant. That's because there are thousands of people all running the program of Bitcoin in their homes. I have a little mini PC right above me, and it is running a full copy of the Bitcoin blockchain, all of its history, and it is taking in new transactions and creating new blocks when they are mined into existence. Now, good luck to the world government, right? Because there's decentralization within control of population as well, and laws and jurisdiction and all of that. Good luck of all the coordination of all of that to be able to stop every single individual from running the Bitcoin code. The Bitcoin network is not stoppable by any one government or any combination of governments. It is just basically impossible at this point to stop it. So right off the bat, he clearly does not understand what he's talking about. The government cannot stop Bitcoin. Before I get into too much more, by the way, my name's Forrest Total. I'm a Bitcoin educator, and I actually do one-on-one coaching sessions for anybody looking to up their best practices for their Bitcoin security, or if you have any other additional questions or concerns, you can book me for a one-on-one session. There's a link in the description to my website, pathtobitcoin.xyz. So continuing on here, Bitcoin network has been costing the economy trillions and trillions of US dollar for more than 10 years now. For what? For a virtual gaming token that is passed from one to another without any economic contribution. It is just a circular hot potato game. I'm starting to think maybe that this is rage bait, because where are the trillions and trillions of US dollar expenses coming from? There's billions of dollars, without a doubt, going into infrastructure and mining rigs and electricity cost. But all of that money, all of that cost, that currency cost that goes into the production of Bitcoin is all voluntary, for one. The network is completely voluntary. And the only reason that there is more and more capital and expense going into the network is because more and more people want to compete for the finite resource of Bitcoin and newly minted Bitcoin. So it is, again, completely voluntary. There's no stopping it. And if people don't want to do it, they don't have to. There's definitely not trillions of dollars going into this right now, I would say. Trillions with an S, maybe. It's really hard to figure out, right, the cost of all the electricity that's gone into it, but hash rate has grown exponentially or very rapidly within the last few years, but it was relatively low before that. But the Bitcoin that it mined have gone up in value, even though the cost of it stayed the same. The Bitcoin unit that we use, a UTXO, that we transfer back and forth over the network from address to address, unless you're consolidating it in your own wallet, unless you're sending it to yourself, every other transaction has a purpose that is for an economic reason, because the use case of Bitcoin is money. And the use case of money is to exchange goods and services for that monetary unit, so somebody else can hold that and exchange it in the future for another good or service. There's a huge amount of economic activity and a huge amount of purchasing power being transferred every single day over the Bitcoin network. When we quote unquote buy Bitcoin, we are in fact just pouring money to cover the costs of generating it and maintaining the network. This again makes no sense. Pouring money to cover the cost of generating it? No. Every single individual has different reasons to buy Bitcoin. We're not doing it to cover the expenses of mining it. The mining increase, the hash rate increases in tandem with the purchasing power in relation to the exchange rate of Bitcoin. So these two things move together. We're not buying Bitcoin to increase the value so that miners can sell their Bitcoin. That just absolutely makes no sense. But Bitcoin is unproductive by itself. It is not meant to be a productive asset. It has no cash flows. It isn't a business. Bitcoin, the unit, is money. It is having any sort of other productive aspect of money distracts and actually takes away from its monetary property. So the only way to get back our money is to find someone else who will buy it from us at a higher price. This is kind of the idea of like the greater fool theory, which only makes sense to this guy because he doesn't think about Bitcoin as money. He thinks about it as a gambling token. So yes, if that's your understanding of it, then it really is just a game of you trying to extract US dollars out of the act of buying and selling it. But this is not what the vast majority of people in Bitcoin think at this point. They are understanding that it is money and that it is fulfilling the store of value function of money better than any other asset throughout history. Yes, its history is short, but that is sort of the bet that you're making into the future, is that the purchasing power will go up so that you can exchange it not for money back to a currency, but you can exchange it for whatever you want in your life, just as you do with US dollars. You could say this exact same thing. Oh, the only reason that you hold US dollars is to be able to find somebody else that wants them into the future for something else that you want. That's what this person is saying to some degree. When the game of the hot potato will inevitably stop one day, the whole pyramid will collapse because all the trillions of US dollars poured into the system are in fact gone in electricity consumption and obsolete heavy equipment. Whew, this is brutal. The whole pyramid will collapse. So this is the idea basically of everybody selling all at once. Prices are made on the margin, so prices can fluctuate. If all of a sudden there was no value perception of a good or service or stock or a market traded good, then yes, the selling pressure would create a collapse if nobody steps in to buy. Luckily, people out there understand Bitcoin and money and finance much better than this guy. And they understand that Bitcoin is now integrated into the financial system. So there's these vested interests of large institutions, very powerful organizations that want this to succeed in some way, largely because they have some sort of extractive vehicle that is built on top of it, say the ETFs or so on. Again, the US dollars being exchanged for Bitcoin at this point are not 100% going to the cost of mining, right? Not all of that is going to miners. In fact, the largest publicly traded miner is worth something like $4 billion, something like that. It's Mara. And so it's just a little bit ridiculous to think that all of that value is going towards mining Bitcoin. A lot of it is going to exchanges and individuals. I mean, exchanges are taking like a fee from that, but a lot of it is going to individuals who are selling for fiat to be able to purchase something else using that fiat because the rails aren't there to accept Bitcoin yet for whatever good or service they want. The US dollars are not disappearing into electricity, right? The electricity companies and Bitmain and WattsMiner and Mara, they're not the only beneficiary of the US dollars that are being exchanged for Bitcoin. After the inevitable collapse, all that humanity will be left with is a virtual coin that completely vanished because no one will be left to pay for its heavy maintenance costs. Well, again, this is a fundamental misunderstanding of how Bitcoin mining works. The Bitcoin mining, if all of a sudden Bitcoin, again, begins to collapse, so does the cost to secure the network. Yes, the network loses as much security, as much hash rate, so it is more vulnerable potentially to a 51% attack by another entity bringing online a lot of hash rate. But all of that is relative. So even if Bitcoin's price goes down to 10K, the hash rate will decline, right, which is protecting the network, but it'll still fall to a level where it is so much hash rate that it would be very difficult to organize a 51% attack and attack Bitcoin network in that in that one vulnerability that it potentially has. So there is no, the maintenance cost of the network, as he calls it, it is a functional market on itself, and it is tied to the price of Bitcoin. So if Bitcoin falls, it becomes not profitable for miners to mine, and they take their hash rate off the network, which lowers the hash rate, which increases the block time, and then that creates a difficulty adjustment downwards, which means it's easier to find a block. And then potentially, because it's easier, more hash rate will come on the network because they are now profitable enough, because the likelihood of them hitting a block is higher. And it all becomes, it's sort of this relation of the price and the Bitcoin hash rate and difficulty. And these things are constantly adjusting. So the amount of hash rate that is on the network today does not need to continue to be on the Bitcoin network for Bitcoin to be successful or protected or maintained in this way. That is just a falsehood and not understanding the difficulty adjustment. Trillions of USD spent in electricity for nothing. Deep economic crisis due to people losing their savings that completely vanished. That's hilarious. The first point we've talked extensively about. The second one is hilarious, considering that like 1% of the population owns any amount of Bitcoin, and likely many of them hold 5-10% of their portfolio in it, and they probably don't understand much of it, and they hold a bunch of S&P, and maybe they have a financial advisor that is an idiot like this guy, and has them in mutual funds and bonds and other garbage that will deteriorate to zero against Bitcoin's purchasing power. So that's just not true. Bitcoin could go to zero today. It's a $1.9 trillion market. It would affect many people, but it is definitely not going to create a deep economic crisis. And potentially, as Bitcoin grows, it becomes more and more, the network effect becomes stronger and stronger. The hash rate goes up and up. The value goes into it more, becomes more usable. It becomes less likely that it would ever collapse to zero. So as more people accept it and adopt it, the likelihood of people losing their value in that Bitcoin goes down and down. So right now is the worst Bitcoin's going to be, right? Bitcoin every 10 minutes gets more and more secure. Every 10 minutes becomes more and more useful. And basically what I'm saying is it is as insecure likely that it will be today than it will ever be into the future. Now there's slight variance and nuance with that potentially, but just in a percentage likelihood way, that's the way I would think about it. And so as this thing becomes more adopted, it's going to become a safer and safer bet. The returns will be less and less, but so will the risk to the downside compared to other goods and services that people need to live. This is funny. Ugly, abandoned data centers with obsolete heavy equipment no one knows what to do with, a real ecological disaster. Okay, say everything he says is true, right? Bitcoin collapses to nothing. This is one of the outcomes of it, is ugly, abandoned data centers and ASICs. The heavy equipment he's referring to are application-specific integrated circuit Bitcoin mining machines that can only do one thing, which is hash the SHA-256 algorithm. Yes, those do not have another use case except for mining Bitcoin or crypto that has the SHA-256 algorithm. So those machines become worthless in that case. Now, how much infrastructure, how much value of that? Maybe, I'm not sure, but billions, definitely not trillions, are put into that. Those could be recycled to some degree. Those could be, again, if there ends up being something else of value besides Bitcoin, they could be used to mine that, and the heat be used. So like, a machine that is obsolete at this point is the S9, right? But what's interesting about the S9 is it is just at that level of power where you could plug it into a outlet here in America, even where we have 120, and you could heat your home and get, 20 terahash from this unit. It's incredibly inefficient for the power draw that it's drawing because of how old it is and how upgraded all of the ASICs have become. However, it works great as a space heater, and there's companies that refurbish these, and there's a huge demand for these obsolete old heavy equipment because they can be used as home heaters that spit off a little bit of Bitcoin and subsidize the heat costs. So that's one thing, right? And that's sort of a little silver lining that depends on some use case for those still to some degree. They can be used in tandem with heating. Now, if that's not the case, then yes, those become completely obsolete and they can be recycled to some degree. The abandoned data centers is hilarious. In the world that we're going towards with AI, these data centers have the ability to tap into large amounts of on-the-grid electricity that is in huge demand, right? There's actually a huge amount of miners that have completely capitulated and moved away from Bitcoin mining, and they now provide the infrastructure for AI and hyperscalers. So is that not the future as well? Is that not a potential future use case for these data centers? And even if AI doesn't become what we all possibly think it could be, these warehouses, this electricity, these data centers can still be used in a traditional data center style of, cloud services and whatnot to some degree, because all of this stuff still needs to scale up. The internet is, again, as small as it will be going into the future. Like, the internet is only growing. Our digital ability is only growing. And data centers are part of the infrastructure that creates the realities that we're moving into in the future. Obviously, I believe Bitcoin's going to be part of that, but this guy just has no clue on every single one of his points. They can be debunked in many, many different ways. So there's lots of gold here in the comment section as well. If miners are forced to shut their machines for lack of profitability, Bitcoin will simply vanish. This is true, but it's not even a tail risk. It's not even possible, right? There's this thing right here, which has the same amount of hash rate as the entire Bitcoin network has in May of 2011, 1.2 terahash. This costs 16 watts of electricity. Who is forcing me to shut this down because of it not being profitable? Nobody. If I want the Bitcoin network to survive, if I want to be able to put my transactions into a block and send them somewhere else, I can run this and I can mine a block if the difficulty adjustment goes down to some crazy level because he believes that profitability of mining Bitcoin is dropping to such a level, which is it will never do. That's never going to happen. However, this could run the entire Bitcoin network. Now, of course, if somebody else had another one of these, they could try to 51% attack the Bitcoin network because that's all that's protecting it. But this is just a fallacy that just does not understand the difficulty adjustment, does not understand the dynamic market that is Bitcoin mining. So what do you think? Do you think he's right? Does he have any points here? Do you think that you should have him as a financial advisor, someone that clearly does not understand money in its simplest sense, obviously does not understand Bitcoin on top of that, and is somehow managing other people's money? I would be incredibly fearful if I had a financial advisor and he posted this. I would be scared out of my wits. I'd be running to my bank, setting it up to receive all of the funds. I would be panicking. If this guy handled my money, I would be panicking. But I'd love to hear what you think. You can comment in the comment section below. Again, I do one-on-one coaching sessions for Bitcoin best practices and teaching people how to secure their Bitcoin for the long run, set up miners just like this and whatnot. And also, I have links to every single thing you need as a Bitcoiner. I have links to Bitcoin Well, which is a great exchange for buying Bitcoin. You can actually use my link and get some free Bitcoin on sign up. And I have a 5% discount for the Start9, which you can run your own Bitcoin node on. I have a 15% discount for Stampseed, which is a great way to preserve your seed phrase on titanium. 5% off of privacy phones if you want to run a graphene phone like this one. And again, just everything you need as a Bitcoiner. It's linked below with some sort of discount or promotional bonus for signing up. Thanks everybody for watching. See you in the next episode of Bitcoin, Not Crypto.